Good morning, everybody. I'm going to go over my pre-market routine real quickly. Um, this is the pre-market high and the pre-market low. And what I do there is I put on an hourly candle and I mark out the pre-market high and the pre-market low, the first hour of trading. If we get a reversal, you can see we had relative equal lows on the hourly here and we had an hourly low there. Liquidity rests at the end of these candles. So once we pop those, we had a big volume spike. If you can see on the 1 minute chart, once we popped these lows on that 1 hour chart, we had a big volume spike. And that's an indication that that's a place where people want to buy. And then the market tried to push lower right here, but it didn't go any lower. And the volume really didn't support this move down. And so I went ahead and jumped in on that. And I was just aiming for half of the range for pre-market, and I just got it. This Fibonacci measuring tool is measuring out the high and the low of the pre-market, and then just a reversion to the mean would be halfway. It may go all the way to pre-market. That's okay. I was just looking for a halfway pullback because that's the halfway point of the hourly candle, and the halfway points are usually pretty good targets. Also on the 15-minute chart, that was this 15-minute high right here. It could go all the way up there, but I'm just going for low hanging fruit. I do recommend leaving these levels on the chart. Now we have a new pre-market high. We can move it down to there. And then when the New York open happens, this is no longer necessary. When the New York open happens, we'll have those levels. So there's going to be liquidity resting up here as well as down here that we could possibly trade to. Or we could go straight up. We opened with a big gap down. Here's the high of Friday, where we closed on Friday, and then this is where we opened. So that's a big gap down. A lot of times I'll put a Fibonacci tool on that, and you can see when we traded up earlier, we traded to the halfway point. See, that's our open right there. We traded just a little bit above the halfway point of this big gap, and then we pulled back, took out these lows, and then here we go. So we could fill this gap, most definitely. Or we could attempt to go higher, fail, and come and take these lows. This was a 4-hour regular trading hour low. You can see a nice straight line here. And so when we opened a little bit above that, took them out, and then here we go on a nice run up. So just keep in mind that the market moves to liquidity, and it's going to rest below the lows of these candles. There's going to this would be in the form of if they were long, buy stops. I mean, if they were short, buy stops. If they were long, sell stops. But either way, there's going to be stops resting down here beneath these. And that's a really nice straight line. The tops are jagged, so it's going to be more difficult to determine a level we may trade to up top because there's no clean straight line. So the only thing you can do is half gap or gap fill as your next. You can also mark this out because this was Friday's high. So I would keep that level on the chart. You don't need to mark every high we've ever had in the history of the index, but this would be a 4-hour regular trading hour high, I do believe. Yeah, 4-hour. And it's also Friday's daily high. So you could also mark that on there. That may even be the weekly high. Let's see if it's the weekly high. Yes, it is. So it's also the weekly high from last week. And you can see resting directly above that, we have two weekly highs right here that could be a target. This one was already taken, so we may just trade up and take these and then maybe offer back down. Or we could zoom up to all-time highs. You never know what it's going to do. But having these, because these are now relative equal highs on the weekly chart there, I would definitely mark those out. We go back to a 4-hour, we can see that's kind of a straight line there. Relative equal highs on the 4-hour. So this one's definitely a target, and we might get a little bit more. If we were to extend this out, you can see all of those are dead, almost dead equal. So I would say that is definitely a target today. But opening with a gap down, we may trade lower and leave those for another time. But that's the basics of what I do for my pre-market routine. I sit down and mark out the pre-market highs and lows. I'll usually start watching it right about 6 o'clock in the morning. And I did catch a little bit of this move down, but that volume spike when we took out those lows right here, right there, when we took those out, and this big volume spike told me that we found a bottom we like. And then on the next push down right here, if it was going to push down lower and it had any weight behind it, there would be equal volume going to the downside. So that told me